What's going on? Welcome back to the channel. So today when I talk to you about Opendoor, I want to go over some of the data points, break it down what moved it, and just go over some hot topics that you need to be aware of. Before we get into any of that, make sure you hit that thumbs up. And with that, let's get right to it. So Opendoor went down 3.08%, 837 the low, 898 the high. So a lot of volatility, but once again, making it a very good day trading type of stock. Aside from that, we did see rather low volume. So 166 million shares being traded, 399 is the average. So as far as today, there was no news from Opendoor, no SEC filings. You did have Kaz put this out on social media saying that he sent this out to his entire Opendoor team earlier today, and I'll save you some time. Ultimately, he's saying focus on AI. That's it. He doesn't want anyone grabbing Google Docs or using any spreadsheets. It is simply AI. Kind of an interesting thing to come from a CEO. But nonetheless, it shows that he's trying to be hip, be more efficient and stuff like that. I don't know if everything can be actually converted to AI, but if he could elaborate on this, that would be pretty A-okay. Aside from that, though, the market was just digesting a lot today. So for instance, we had an increase in geopolitical issues. So there seems to be some stuff popping up with Ukraine again, Russia. Aside from that, though, you did have Trump announce after hours yesterday that potentially a shutdown might be coming. And he also did announce some tariffs. Nothing substantial for the tariffs just yet, but it goes to show that he's that's what's on his mind. Aside from that, we did have some pretty okay data. So PCE came in month over month for the core, lower than the forecast. Same goes for year over year. So came at 2.7, 2.8 the forecast. Michigan consumer sentiment came in at 55.1, forecast of 55.4. So overall, you kind of have a lot of positives and then a lot of negatives. Market wanted to really focus on the negatives. In my opinion, in Opendoor's case, you also have people talking about dilution. And Eric, even though he's been relatively quiet lately and not really motivational as what a leader should be, but he did bring up what people are saying about the coming dilution. So I wanted to kind of talk about this and everything. So ultimately, when they're talking about dilution, they are referring to the convertible note. So the one that is due 2030. So they did, on a side note, issue this note paying off their convertible 2026 note and also having a little bit of extra cash on the side. So they got rid of that. When it comes down to this convertible note, it not necessarily the best. You have to keep in mind the company was in a very bad scenario, bad place. So it was trading at about 87.2 cents per share. So the stock was really bad. And so they kind of felt that they had to, well, they probably didn't, they had no choice, but they had to raise it from 0.25, so that was the note from 2026, to 7%. So it is a 7% rate. On a side note, this is what people are really talking about. This is dilution. So the original actual principal has to be paid back with cash. The interest is paid in conversions of stock. So ultimately, 7% is going to result in a lot of dilution. Keep in mind, not like a substantial amount that's going to cause like a 90% pullback, but if I was the company and if I was Kaz, you would read through this because it does have a initial conversion price of $1.57. So that's part of their capped call that they did have. So anything above $1.57, you don't really have that, like you're going to get diluted to kingdom come for the most part. So whenever the stock price does go over 130%, the company can actually buy this back. So if I was Kaz, I think it'd be advantageous to really focus on this, unless you can grow the business more than the 7% plus probably, I would assume, tack on another 10%. So unless you feel you have enough margins to actually eat this, you might want to just, take this off the table if I was Kaz. So again, moral of the story, there is dilution occurring, but it is not coming up until November the 15th. But so just be aware of that. I always like to give you the good, the bad, and the ugly. I'm sure this is why Eric isn't actually answering the question. I don't know if Eric just, again, is trying to focus only on the positive, so he doesn't want to address this, but dilution is coming. So Spoiler alert, surprise, happy early November the 15th. Aside from all that fun stuff, shorts, they did increase 1.59 million shares. 19.36% of the free float is being shorted, works out to be 137.28 million shares overall being shorted. So shorts took advantage of the fear, doubled down. Looking at the options, 48 million in calls, 15 million in puts, then 46% of all the options being done were bearish in nature. If we can pop this open, so 6 million in premiums between 12:55 and 1 p.m. Orient this based on premiums. You can kind of see it looks like it was a kind of a multi-leg transaction. You can tell that based on the timestamps, and so it looks more of an iron condor, and so it was expiring today as well as next week. So there's a cap for the most part, so it looks like they don't feel, this big institution at least does not feel it will be above $9. At the same time, they don't feel it's going to be below $8, so they kind of think it's going to be between that $8 to $9 range. So what's your viewpoint on that? Aside from all of that though, with it closing exactly at 881, that does mean that the 850 strike prices and below are in the money. So looking right over here, so you have 96,000 at that 850, 22,000 at that 8, 15,000 at the 750, and so forth. So potentially a nice little pump up going into potentially next week. Don't really see that crazy of transactions on the secondary market or the dark pool, so I don't think market makers have covered anything. So these are all the transactions on the secondary market. That last screen was the dark pool. So 7.3 million, 1.1, but still nothing to justify and cover everything there. So you might again see, like I said, a little bit more of a bump up. Stay tuned for my video over the weekend where I go over some expectations and everything else. With it right now at 881, it is between this S1 and this S2. So kind of bounce off this general S2 area. So very strong support. So 843 is going to be that next and kind of support level you just want to watch for. 893 and then 973 is going to be the next strong target / resistance points. Aside from all that fun stuff, quickly popping over here, so you can kind of see based on how the market position ended, you see a lot of willing sellers, and it did close below that 10-day moving average, so signaling a little bit more of a slowing momentum. Nothing really of substance coming out for news or anything like that, and there hasn't been any new analyst rating. So I think right now Opendoor has alluded to big things coming, so new product launch and whatever else, but they definitely do need to put out something ASAP, because I've mentioned in the past, Opendoor, in my opinion, is a very big momentum stock. And so with a momentum stock, you need to keep people's attention on it. So you need to keep giving updates. And like I said, I think Eric's doing a very poor job of being a leader. He's rather arguing with people and just talking about random crap. He needs to really focus on the fundamentals and keep doubling down and saying, hey, this is a buy because of blah, blah, blah. That's what a momentum stock does need, not what he's doing. And same goes for the company. I think the company can actually, Kaz can do a little bit better of a job just to hype up the stock. But what do I know? Let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.